Hey everyone, this is June from Turning Point Life Investment, and this is your market analysis for September 25th, 2010. Okay, let's go look at the S&P 500. Now, we had quite a volatile week this week. We did get a little bit of a pullback. I was expecting just a pullback. I expected more, but the market only gave us a little bit, and on Friday basically just kind of, erased all of that decline and almost hit it, gave us a new high. The main story is that volume is still relatively low, but nonetheless prices still continue to be higher despite the lower volume. One thing you want to see here is that now prices have used this prior resistance and basically turn it into support, and you would normally see that whenever resistance is broken, it usually comes back retested and comes back and finds support to launch itself higher, which is what the market did. Now we are up against this prior gap area around the 115 area, and if there's any more room to go, this is probably the next area to aim for, which is around the 116.50 area, and then also you have another level of resistance around the 117.50. So quite a few resistance level just up ahead. Okay, but definitely there still seems like there's a little bit more for the market to go. One of the things that I always like to do is that there's always some kind of price symmetry when it comes to market movements. Usually I would take the prior leg and kind of use that as a target, just for estimation purposes. So for example, if this prior leg up was about, we'll say 101 and the height was 113, that's about a $12 run. Okay, so this from here to here is about $12. After the pullback, then we can add $12 on top of that. So in other words, if we add $12 at 104, then that would basically give us a target of 116, which is pretty close. We are only $1 away from 116, so that's a true decent target projections. Then I would definitely aim for 116, which more or less falls in line with what we talked about just looking at prior resistance levels. There's some pretty strong resistance up here, so again the market seems like it has some more room to go, but the resistance, pretty strong resistance, is overhead. Going into the VIX, the main thing that still kind of bothers me about this rally is that the VIX just isn't breaking down. It's still hovering around this area despite the fact that the market is going higher and higher. So some pretty major divergence that's going on in sentiment. But nonetheless, you should always follow price action. Price action goes higher, you should always follow the direction. And usually when you look at these indicators, these sentiment indicators, they basically tell you how aggressive, how heavy you should be in. If the VIX breaks down, okay, then yes, I would probably go heavier. But since the VIX isn't breaking down, I'll probably go lighter. But nonetheless, I'll still continue to go long because that's where the market is going. So these indicators tell you just how, in terms of risk management, aggressive you should be. But direction-wise, you should always look towards the market.